All right. Welcome to Jazz After Dark, everybody. How we doing today? Hope everybody's good. Nice and relaxed. Got your favorite drink next to you tonight. We're back with the Buffalo Trace tonight. It's just one of my favorites there. Do enjoy it, and I hope you're hanging out with me and ready to enjoy something here as well. I'm going to try maybe something a little different. I'm getting the question a lot about building wealth. And, you know, there's obviously there's a lot of things you could do if you have some level of money. And then, of course, the more you have, the more the doors open up. But I thought we'd just start at the beginning because everybody's always interested in that little secret like tip or whatever. And that's tough to do. You won't find like anything on YouTube or anything real specific because the more unique you get, the more individualized it becomes. And so, yeah, there's lots of things you could do, like pooling properties together and sort of selling off interests and the new regulations that are out there. You can sell them off to even smaller investors. We'll talk about that in a second. You name it, right? There's a lot of things you can do, but we got to start somewhere. So the first place that I want to start with you tonight is not thinking about the market or dollar cost averaging or investing in a particular account as only for retirement. And I took that for granted. I'll be honest. I just assumed people knew, hey, you got a little money for retirement, your 401k, maybe an IRA or something. You come on over to Jazz Wealth, because this is marketing. So you keep us in mind. I get it. And then I just assumed people would go on to like a brokerage account and say, well, this money maybe not for retirement, but I have other goals and wealth ambitions and things. And so I'll use that and put a few bucks in there as well. It turns out that's not the case, right? So a lot of people think of the market or saving, forcing them to get rid of some of their dollars and put it towards the future as just retirement. And I really want you to think about it differently. If you have money in a brokerage account and you have real estate ambitions or starting a business or getting some kind of a loan to then back whatever your idea is, well, that brokerage account can count as an asset. Whereas in a retirement account, the money has to come out first. It's not an asset unless the money's in your hands. Well, if the money's in your hands, that usually costs you a 10% penalty, and sometimes you'll pay tax on that as well. But a brokerage account is an asset which could be used as collateral, maybe not liquidated and used towards the down payment of said property or, backing it for a business loan or something. But it's considered liquid assets because if you had to press the sell button, you put it in your pocket and you move on. So think about it that way. And plus, brokerage accounts, they offer their own taxable advantage. When you start getting into various products that you're going to trade in a brokerage account or invest in, let's put the trading aside for tonight, you have advantages there. Sometimes it's not as simple as saying, I bought XYZ, I made a profit on XYZ, and therefore I owe either a short or long-term capital gain. There are times where you can break that position into pieces, even if you sold it. Let's say you bought it today, sold it 3 months from now, and it's one position. There are times you can actually break that one position into two as far as being treated differently for short or long-term capital gains. So there's a whole lot there that you can dive into, especially when you get into futures and index options or index futures, if that's your thing. So don't think of those terms as, oh, that's scary, I don't know. It's no different than a stock. It has its own set of rules and requirements, and a stock has a different set of rules and requirements. You choose to participate in one or the other, totally up to you. The moral of the story is the market is not just for retirement, and it's certainly not just for the traders, the buy and sellers, right? It's for those people in the middle too that are trying to build some wealth. Number two, this is going to add pennies to your wealth, but I find this fascinating. I use Capital One myself, just not for any particular reason. We had a business card and then it came with it and I started paying attention to it. But there are so many extensions that you can add onto your browser or onto if you have a credit card or debit card, onto that as well. That, again, it's just pennies. This is not going to make you wealthy, but that will make sure you're getting the best price for whatever it is you're trying to buy. I just bought a headset for my flying, And I wanted the nice one. And I just wanted to make sure I was going to get the right price. The price was basically the same everywhere. But when I did it through my business Capital One thing, and this is not a sponsor thing for them, by all means, use Rakuten, or there's, Honeybee and all these other things. But when I did it, I found out that another company that I normally buy stuff from that I didn't even think of, well, they had like $40 off of it. And so I was like, okay, well, I'm not like loyal to one company for this product. So I went with that one, and I wouldn't have known that. I just sort of slipped my mind that this was another option. Well, that's $40. How many things do you buy on a daily basis? Some of them are shopping based, where if you're going to buy toilet paper anyways, then maybe it's the same price as whatever, Amazon or something. But they'll give you a rebate back. I haven't gone that far, but don't discount that stuff because you think of it as that's more coupon-y, doing that stuff. No, that all adds up, man. It's all a bit of wealth. I could tell you some stories there. Number 3, don't be afraid of real estate if that's what you're passionate about and you just don't have a lot of money. There are a number of different ways that you can invest in real estate as a partner. And then as you build your money, then you can go it alone and go the physical route. So you probably know names like Fundrise is marketed a lot, Yield Street. You can even go into the market and participate in very specific REITs that are popular, that pay monthly dividends and all of that. But they have a focus. Maybe it's apartment buildings, or maybe it's college campuses. There's actually a REIT, a ticker symbol you can buy that it just does college campuses. So if you're already thinking, there's a niche there, right? One day I'd like to have 2 or 3 properties wrapped around some college campuses, and I want to make my money that way. Okay, cool. That's what you want to do, but you don't have hundreds of thousands to, get your foot in the door. Well, consider doing something like that to get started. I'll bet you that if you do that, maybe you'll make a few dollars, but I would bet you that you'll ask some questions, right? It might make you think, because now as a partner in a REIT that involves themselves in college campus buildings or apartments off college campuses, then you're likely going to pay attention to that company's financials. You're likely going to wonder, how is it that they buy these? Okay, I'm not going to compete with them. I just want to buy a little house next to a campus. But what do they look for? Why did they not pick this campus over here? Why are they only interested in this college or whatever it is? It's a great way to get started. And of course, it'll help you build your wealth, but you don't have to go diving in with tons of money. So don't be scared of that. I find the kids are often scared of real estate. They always tell me, I'm going to get in real estate. I want to be involved in duplexes or, whatever they're into. So there's even platforms that have what's called Regulation A offerings, where you could be small potatoes. And maybe you found a person that they buy commercial strip centers that have a gas station on the end and a Walgreens on one end. Well, you, as a small, non-sophisticated or qualified investor, you're allowed to participate these days. I would do your research on those. That just came to mind. So do your research on those first. Tip number 4, finally, this is sort of an anti-tip. Just like stay away from gold. That kills me. So many people are like, I got my money in gold. Okay. I get it if you are a doom and gloomer, and, and I hope you're not right, but, I get that part where you're like, I want something physical. Okay. Everybody is allowed to do what they want with their money. But other people say, I just think I should be diverse. Really? What's the return of gold? Anybody? I don't hear any answers. Is it a stable investment? Okay. Is it a generous investment? Does it pay dividends? That's okay if the answer is no, which it is. You don't have to invest in something for a dividend, but let's play a game here. If you're going to invest in gold, you better be good at cherry picking the time that you invest in gold. And this is not an opinion. I'm going to actually try to pop over here. So all I did, I swear on everything that I've done for you guys ever that I did not hand pick these time periods. I did this randomly. The first thing I did, I logged in and I wanted to go back. I just hit 10 years. Let me go back 10 years and see the price return of gold, because there's no dividend, so there's no such thing as total return. Let's go back and see what we would have made annualized over the last 10 years 1.15%. Okay. Now the last 10 years have been a little sketchy, so I can understand if you said, well, that's a fair price to pay in order to keep my dollars safe, and you buy into all that and want to do it. Okay, fine. The next one. I said, well, I just typed in 2000. So it's the exact same 10-year window, but instead of going back 10 years, I just typed in 2000 because it was fast and easy to do. That's it. So going back now, 23 years, very nice. 8.39. Okay. Now we're talking. That's your annualized return. In other words, if you were in it for that entire period of time and you divided your total return by 23 years, you'd have made 8.3%. That doesn't beat the market or a handful of other investments, many other investments, but nonetheless, you can't complain about that. Next thing I thought was, let's randomly pick a time period. And all I wanted to do was change the year. You could tell I was being lazy here, right? So I thought 1988, that's it. I just typed 1988 blindly. And then I just wanted to type 1999. So I wasn't even trying to pick. This is a 11-year window, and you had a loss. Annualized loss. So over 11 years, your money yielded a return that was less than zero. Okay? So just be careful with gold there. I'm not saying gold is bad. I'm just saying realize the personality of gold. And if you're going to participate, make sure you're pretty confident that you're participating in a period of time where there's going to be some expansion in the price of gold or silver for that matter. So that's tip number 4. Hey, tip number 5, I got a bonus one for you. How bold are you? Do you want to be rich? Do you want to be all wealthy, whatever that means to you? Sell your car and go drive a classic car. And I'm saying this from experience. So not that I'm like wealthy or claiming to be, but I actually drive a classic car. So it's a 1941 Ford truck. And it has appreciated in value, which is weird for a car, right? You don't expect that. It's also easier to fix because there's less stuff going on. I got power windows, I got AC and all that in this truck. It's not like I'm roughing it every day. And I'm in Florida, I got to have AC. Power steering, I got everything that I need. It's got a brand new motor in it and everything, but it's nothing complex. If something breaks on it, parts are aplenty and I'm not stuck to one brand or thing. And if I need to fix the alternator, I could see the thing. I could just do it, right? And maybe you're not handy or whatever, that's fine. But you're changing a basic alternator that doesn't have all kinds of diodes coming from it because somehow we're controlling the HEPA air filter thingy. You know what I'm saying? So a bonus tip, if you really want to be wild about it, go buy a classic car. They're not expensive. You know, the next one that I get is likely going to be a 1932 Ford Roadster and maybe 30 grand, right? For a really, really nice one. So if it breaks, like the cowling is just non-existent. So I'll be able to see what broke and right. Oh, it's leaking. So simple to fix, lots of easier parts. Not everybody will do that. And I'm just saying that's a bonus sort of fun tip. Tip number 1, of course, today was dollar cost averaging, and investing in the markets is not just for retirement. It can be for other wealth building as well. Don't be scared of that. Tip number 2, to add some pennies to your wealth, not dollars necessarily. Consider something like Rakuten, maybe the shopping apps that are all available. I mentioned Capital One, Honeybee, and some others. Tip number 3, don't be afraid of real estate if you want to participate. There's no excuse. If that's your game, you have a way to play. Even with $1, you can start playing. So no excuses there. Get in the game and start asking questions. And tip number 4 is consider not investing in gold if you're trying to build wealth. The gold and commodities often are, I don't want to say a hedge, but they're there to protect certain pieces of your wealth. They're not there to protect all your wealth by any means. And bonus tip, if you're feeling bold enough, drive a classic car. And if you happen to take that tip and do it, I'd love to see pictures and hear more about it. Feel free to email us and let us know. That's all I got. That went by quick. All right, enjoy the rest of your evening, I guess, and we'll be back tomorrow, right? We'll see you on a closing beat tomorrow too, right? You gonna be there? It's free on YouTube.